Yo, what's good? It's your bro Lo, and I'm bringing you guys a saucy trading video. And I'm just gonna go over how you can have a bigger edge with institutional order flow and getting more high probable trades. So let's start off with that I'm not a financial advisor. I'm just a regular guy, regular trader giving you non-financial advice. All right, so if you go eat some booty for $2, I have no power over that. All right, that's your decision. Okay, so with all that being said, I hope you guys had a very good week. I hope you guys did a lot of studying, and I'm about to give you some nuggets. So go ahead and smash that like button if you haven't yet, and we'll get right into this video. Okay, so let's go ahead and start with our little handy dandy text right here. And let's just write these down real quick. Let's write these down. All right, so let's go to text real quick. Go to a higher text. Yeah, all right. Whoa, I forgot I have my little magnet on. Hold on, give me 1 second. All right, boom. Okay, let's go ahead. I'm actually gonna, do a little bit editing and go ahead and edit these in real quick. And you guys can write all this down. All right. Okay, guys, so I have this written down. If you guys want to go ahead, let's just go over this and make sure you write this down too. Whenever I'm looking at the charts, I'm always looking at these three first. Like, I'm thinking about these three. Okay, where is the current draw on liquidity? Higher time frame, right? So we're basically looking at the daily. So let's I wonder if this is this an anchor note. Actually, this isn't. Let's go ahead and make this an anchor note real quick. I'm gonna delete this and I'm gonna make this an anchor note. That way we could keep this over here while we go over these. All right, or while we move on to the chart. All right, so where is the current draw on liquidity? Higher time frame. So we could start off whatever you're comfortable with. You could start off on the monthly, weekly, daily. I'm gonna just go on the weekly right now. So let's just start with the weekly. What is price currently drawn to? All right, and we're gonna start off with this weekly candle right here because this is the current week. Now you can see that price came into this bullish order block right in here, which lines up with a bullish breaker. Okay, bullish breaker and bullish order block down here with this wick. Okay, now we see that this is a highly probable area that price can have some sensitivity to, which we've had right around here. So price was currently drawn into this and we had a nice run up last week. Okay, so the question is, what is price drawn to? Higher time frame. So we can't call a bottom or top. All right, we know that we're in discount, right? And we're not going to call a bottom or top. So right now on the higher time frame, price can still be drawn to possibly to fill in this imbalance right here, the rest of this imbalance right under this low, which can be possible sell side liquidity, or we could come into this imbalance right in here, this FEG from this body's low to this wicks high right here. Okay, we could come into there. So that's where my eyes is, and we could also come and take out these lows if we really push through this and we get some oomph to take all this out. So that's the current weekly draw on liquidity right now. Now, because that's my higher time frame draw on liquidity, does not mean that we can't possibly start reaching up. Okay, so daily draw on liquidity, all right, is to the downside because we're not going to call a bottom, right? Once we start seeing structure shifts, say price broke this, right, and we had a break of structure and maybe a structure shift, then we know that our higher time frame draw on liquidity can start being these highs right here. So once we break this, then you can start changing your higher time frame possible draw. Okay, so that's our higher time frame draw on liquidity. That's how I get my higher time frame draw on liquidity. All right, weekly, daily, 4 hour. Now, where is price currently, and what is it doing? So if you look at price, right, we could see that price came into this weekly order block right? And we had a nice push up, and we have a daily order block that formed, and you can see that price this week had came and wicked into it, right, and had a push up. So where is price currently? Price is reacting to this daily order block, right? We came into here, and then we had that push up. All right, so this was on Tuesday, I believe. Okay, yeah, so this is Monday's price action right here, and Tuesday came into here. Okay, so Monday was sitting around here. What was price currently draw to? Possibly this bullish order block here, right? Because this is where I would want to see some buys at, because of this structure break right here, and coming into this daily order block to possibly push up. So my current draw was possibly this high here, right? Especially since we're getting reaction here. My current draw was here. So current draw can be like lower time frame, you know what I'm saying? Where is the current draw on liquidity? Lower time frame, or wherever relative time frame you're at. You want to know where is price currently and what is it doing, and then you go to what is price reaching for, right? So if I know that price comes into here, right, I know that once it reacts here, price can currently be reaching into the high of this right here, and also up here. So this would turn into my current draw on liquidity. What is price reaching for? Which is your current draw on liquidity, like lower time frame, right? I hope that makes sense. So when you have this, right, this is what you want. When you get on the charts, this is what you want to look for, right? Current draw on liquidity, higher time frame. Where is price currently, and what is it doing, and what is price reaching for right now? So that would be relative to that time frame, right? You have your higher time frame bias. This is relative to whatever time frame you're looking at. Okay, so hope you got those written down. Let's go to number 4. Okay, now I told you, how can you have a edge with order flow, right? With institutional order flow, how can you have a higher edge whether you don't know nothing about it that much? How can you have a bigger edge? Okay, so I'm gonna tell you guys that right now, and that's institutional confluence. Okay, institutional confluence, right? It's not a big secret. Institutional confluence and understanding how price rebalances. Okay, that's the nugget right there. All right, institutional confluence. Now there's a lot of people that just look for order blocks, and that's fine. If that works for you, that's good. If you just look for order blocks and that's it, that's fine. All right, but the reason why I say institutional confluence is because you're building more context, and you have even with retail trading, like, you want to build a lot of confluence, right? So like when you have a whole bunch of areas in one single area that you're looking to buy at, it makes it more probable when you have a lot of institutional confluence in that area. So I'm gonna go ahead and give you guys an example. Okay, I'm gonna give you guys an example. Also, let me put in here, mark out all PD arrays. Okay, mark out all the significant PD arrays. So this is relative to what you think is subjective. What do you think is significant to you? If you got a lot of experience, there is gonna be you're gonna see what's really significant and what's really not. You know what I mean? So just practice trying to find the most significant PD array. So somebody asked me, what is a PD array? It's basically just a POI in short. It's just a different name that people call it. Okay, yeah, mark out all the significant PD arrays. All right, not just order blocks, right? I want you to try this. Okay, now that we have that, right, we have this on the side. I'm gonna give you guys, you could pause the video if you want to, go ahead and write all this down. Okay, write all this down, and then we can go over this. All right, 3, 2, 1. All right, so let's go ahead and move this out the way for right now. We're gonna move that out the way, and let's go right into what happened with Euro USD. So this is gonna be a price study. I'm gonna show you exactly what I do to really get a bigger edge with institutional order flow. All right, and in higher probable trades. So we have our context, right? Tuesday we came into this daily order block right here, this daily order block, day 1 OB. We came in, wicked into it, and we started ranging for like the rest of the week right around here. And then you can see around Thursday we had this nice little drop. Okay, this nice little drop from here. We didn't take out this buy side liquidity like I thought. Now the market on EU is kind of two-sided right now. It could go anywhere, right? We're stuck in between this low to this high right here, and we've just been ranging inside of there, right? We've just been ranging. So it's not the most probable conditions. So right now, if I was to say like, what is price currently drawn to and what is it doing, I don't know. It could be drawn to this buy side liquidity right here, and this high can be protected, or it could take out this high here, or it could take out this low here. Okay, so it it was really weird, you know what I mean? You really don't know. Now a little thing that I saw, like a little edge that I've had, was SMT divergence with DXY. So I knew this high could possibly be protected, right? It could possibly be protected. If you don't know much about SMT divergence, then I would look at ICT. Go to ICT's channel. A lot of the stuff you can learn from ICT. So go in and dig into that SMT divergence. Now, as you can see, price had that displacement lower, and we've been ranging. So we're here on this day. This is what I want to go over. All right. So institutional confluence, mark out all our significant PD arrays. Okay, that's what we're gonna do, and I'm gonna show you how to understand how price rebalances and what you could do. Right, you don't have to just use order blocks. Okay, it's more to it than just that, you know what I mean? So let's go right into this. So we can see that price had that displacement lower, broke structure. We left this buy side liquidity here. All right, so when I'm thinking what is price drawn to, like I said, it could either be this high, or it could either be this rejection block right here. Okay, and the rejection block is just the body of a bullish order block, the lowest bullish order block down candle, right? And the opposite, right, would be like this up candle right here, right? Basic, if you could think of it, if as an example, it would be like support and resistance, like that. Okay, so now that we have this range, okay, usually I like to pull out my fib and understand where OTE is. So from here, so I know that OTE is inside of here. Okay, we know that OTE is inside of here. Let's go ahead and mark out OTE. Okay, so this is what I'm talking about with institutional confluence. This is exactly what I do. All right, I know that OTE is right inside of there. Let's go ahead and pull that out. Now, when we made this high, right, we took out liquidity right here, this old high right here. So I know this high could possibly be protected, even though we have buy side liquidity above it, but it's still kind of low probable because of this buy side liquidity above it, and this very high premium of this order block, right, of this swing down, right? This is a higher premium, but I'm paying attention to this right now, okay, because I like how it made a displacement lower. Now, if you guys don't know about FEGs, this is a FEG, right? This is a SIBI. Look how clean that price move is. There's no price action in the middle, right? Look at this, from this wick to this wick, right? From this wick, down move. From this wick, there's an FEG in between that. No price action in between it, okay? Just for you new people that probably don't know anything about this, and if you're new to this, you might not really understand what I'm talking about. So you gotta really, like, you know, dig into your charts and dig into the concepts, you know what I mean, a little bit more. So we have this swing high to swing low, Now, once we have that, we have this break of structure right here. Break of structure. Okay. So let's go ahead and mark that out, bearish break of structure. Okay, so this is telling us that this high is significant just because it made this right here. It's more significant because it broke this. All right. When we broke that, right, and this is what I mean by institutional confluence, we know that this is a breaker, right? If you don't know breakers, it's basically a down move before the up move that got broken, break and retest. Okay, it's like break and retest. All right, so if I was to draw it out, it would look something like this. It will look something like this. Okay, okay, this would be your breaker right here, this low. Because this low took out this high right here and it broke, this would be your breaker. All right, mitigation block would be something like this. Okay, mitigation block. Because this low did not take out this high or liquidity and it broke, this becomes your mitigation block. All right, so with that being said, we have this breaker here, so we're gonna mark that out, right? We want to mark out all of our PD arrays. You could do the wick, you could do the body, whatever you want to do, right? Usually I do the wick, sometimes I do the body, you know what I mean? So I'm just gonna do the body. I'm gonna go ahead and mark this out as my 1 hour breaker. Do I have 1 hour breaker on here? Yeah, 1 hour breaker. Okay, so this is my 1 hour breaker. 1 hour breaker, and I'm gonna go ahead and take this little drawing out. All right, stick with me, y'all. Stick with me. This is gonna be some real nuggets. All right, so you can see that we have this breaker. What is also inside of that breaker? Right, we're going from top to the we're doing the PD array matrix, right? We're going from top to bottom, FEG to breaker to order blocks. Okay, we have our breaker. Let's mark out our FEG. So you can see our FEG is right in here. Okay, we have a FEG in here. All right, so we're gonna go ahead and pull that out right there, and then pull out a text just so you guys can see that our FEG is this here. Okay, so let's do a text. I thought I saved FEG on here. I promise I did. Let's just go in and write this out then. FEG. I said FCG. FVG. All right. So we have our FEG, right? We know that the purple is our FEG. Let's go ahead and mark this out right here. I'm not gonna put the FEG in there. I'm just gonna put it like this. Okay, let's go down to a 30-minute and see if we can refine it a little bit more. So you can see we could kind of refine it just a little bit more right here. Okay, so this is our FEG. We already filled it just a little bit right here when this wick came into it, rebalanced it, so we can use the top of this wick right here. All right, so that's what we got. You got a little bit right here, but we're gonna pay attention to these because our order block is sitting right here. You could mark this out too, and that's fine if you want to. Okay, so now that we have that, right? Now that we have that, we have, what else do we have? Let's move up. We have this up move, right? Now this wasn't the highest up close candle. This was right here. So you can mark out the body. I would mark out the wick right here. Whenever you have a small body, it's best to kind of like just mark out the wick. Okay, so you have this wick right here. This is our hourly order block. Okay, our highest up close candle. 1 hour order block, mark that out. Okay, we have OTE sitting right here, hourly order block. What else do we have? You might not know nothing much about this, but this would be considered a rejection block right here. So if you guys go into my Telegram journal, you guys will be able to see that I had all these PD array matrix marked out ready for today. Okay, had all that marked out, so you can see that we have the hourly order block plus rejection block. Okay, So that's what we have. This is our PD arrays that we have. This is the PD arrays that I'm paying attention to. Now, also, I know that with NFP, we could possibly get up here and take out this buy side liquidity inside of this hourly order block. All right. So now that we have that, now that we have our PD arrays, right? We have our rejection block, order block, FEGs, breakers, all of that, right? Let's go down to a 4 hour, up to a 4 hour time frame. When you go up to a 4 hour time frame, you see how you have this up move right here. Now you know that this is a 4 hour order block open, so you can mark that out or just have that as context, right? Have that as context that this is a 4 hour order block. When you go to the daily, let's see what the daily did. Okay, so nothing on the daily. We're just building context. We're basically building up a lot of confluence. All right, so now that we have all that, right? We have our PD arrays. When price came into here around London, right? This is around London. We had price start moving up, right? Took out liquidity, started moving up, and we're coming into our PD arrays, right? We know that this is a FEG on the hourly time frame, right? Mixed in with this breaker. So when you see price come into here, you see how price rebalanced this, how price is holding, the bodies is holding inside of this FEG. So when we go down to a lower time frame, let's scale down. Okay, let's scale down. So this is a price action study right here. When price came into this FEG, we had this right here. All right, we had this. Okay, you can see that price took out this high, had an aggressive run lower, creating a SIBI, this FEG, right? This FEG, and you can see how price came back up. So this is basically a market maker sell model right here, and this is where I usually look at before when I'm looking at a sell model. I first analyze to see if there was a stop point and break a structure, because usually that's like the market maker reversal. I'm just going to simplify it, and then my eyes go to this here. My eyes go right to this as a draw, as the end of consolidation, the draw on liquidity, right? I'm expecting price to gravitate towards this as a draw on liquidity once price is in here, right? So I know that my current draw was here. Now that we're in here and we're creating the market maker sell model, now my draw on liquidity becomes this right here. Okay, so I'm gonna go into the price action part of this when we look into this area. So let's go ahead and do that. Okay, so you can see that we're inside this hourly breaker. So we're gonna move this over like so. Okay, and you can see how when we came into it, we came into the open of the breaker and we came into the FEG. All right, we have this market maker sell model. You can see there was a small fractal stop point, return to order block plus fair value gap, and then push lower, right? There was a smaller market maker sell model inside of here, right? So now that I see that, this would be what I'm looking at. This would be what I'm paying attention to. Now that we have this breaker structure here, all right, breaker structure, right? Stop point, your basic Quasimodo, as they like to call it, stop point, breaker structure, market maker sell model, you know. And then after that, I'm looking for the premium and discount of this range. Okay, I'm looking for OT. So you can see OT lined up inside of this fair value gap right here in these two consecutive up candles, which is a full order block on another time frame. There's also some FEG in here as well, right, that you could pay attention to and mark that out. But I'm mainly paying attention to this because OT lines up inside of there. So I will mark this out right here. Fair value gap. Okay, I'm gonna move this over. We already know that we're inside of this fair value gap, so I'm gonna just move this over to really show the candles. All right, we know that we're inside of there. All right, so now you can see this. Look, this is what you can see. All right, you can see that price came into this fair value gap plus these two consecutive up candles, right, which is a mitigation block on a smaller time frame. This right here is a mitigation block because this is your stop point breaker structure. This would be your shift in market structure here, mitigation block FEG. Once it came into here, this was my entry here, right inside of here. Okay, so this was the entry. Stops would go right above. You could put it above this high, right, because you really wouldn't want to see it break above this high, or you could put it above this high to be safe. All right, so as you can see, price had came, rebalanced this FEG, right, came into this higher one right here, and then it broke down. But we also came back up to run this high once again and come into this order block right here, and then we pushed down and broke structure. So what is this right here? Again, your stop point breaker structure still inside this FEG, right, in context with what happened, it mitigating this order block right here, right? So this would be your low risk sell. So you can see that price came up, broke down, and look at this. Do you guys see this? This is a SIBI. This is a fair value gap right here. So from this body of this candle right here, down move to the top of this candle right here. So when you see price likes to come in and rebalance price action, right? It likes to rebalance price. Okay, so a lot of times when order flow is in your favor, a lot of times you don't really see price come and rebalance this all the way. This rebalance completely, right? You can see how price came into here, came up to the top of this, and rebalanced this completely. You can see how the bodies of the candles stayed inside of this FEG. It didn't come up into here. Okay, it didn't do that, but it came into the breaker as well, right at this wick, the breaker of this up move right here. Okay, with this imbalance that got rebalanced, right? Your entry could have been at the consequent encroachment, which is the basically, you know, you have the order block with a mean threshold. This is the consequent encroachment right here, the mean of a FEG. You can enter here, or you can enter right at the wick of this, or the rebalance. But like I said, when price is trying to get somewhere, it doesn't necessarily rebalance everything completely or fill in FEGs completely. All right, so you can see what happened here. Look at this. If you missed this entry right here, you had another entry right here, or you could have added it in right here, added in, scaled in. Okay, look what we have here. Look, stop point, this wick coming above this high, then you have a break. Okay, now let's see what happened. All right, when price broke down here, you can see it created a little bit of inefficiency right inside of here, from the tip of this wick to the bottom of this candle right here, to the top of this candle right here. Okay, not only that, it also created this right here. You see from the bottom of this right here, came down, look, it completely rebalanced this and tapped it just a little bit, tapped inside of this SIBI, this inefficiency right here. What's with that? The wick of this up candle, also the down close candle, the wick of the down close candle right inside of there. If you miss both of these two entries, you had an entry here, right? And you can see how price is rebalancing. So like I was saying, you have to understand how price rebalances, right? How do they like to rebalance price, right? And how do they do it? This is what they do. They don't come up to your order block all the time. When price is trying to get to his draw, this is what it does. Okay, Not only that, when it did this, we have more confluence. Excuse me. Our confluence is the you have a premium of this array, this FEG, and you have a discount. Look what it did. It came into the discount as well of this premium array, right? And body stayed inside of there and broke down. Okay, it broke down, and you can see how price aggressively ran down and attacked, and it reaccumulated inside of here. All right, so this is how price rebalances. You have multiple chances to get into this trade right here, and price did not take out the original consolidation. It stalled around NFP, right in here. It stalled and started reaccumulating. So like I said, when you have a consolidation in a market maker sell model, whenever you start reaccumulating around the consolidation, which it came into an order block, bullish order block of this consolidation, whenever it started doing that, and maybe when it starts shifting structure, you want to go ahead and TP, right? You want to TP a lot, maybe majority of your position, because there's a chance that price's sell model had ended. Whatever model it's in, it ended, right? Okay, you can see you had reaccumulation here, reaccumulation here. It barely gave any reaccumulation like that besides here, which it never broke this, so this is still like the low risk sell, and it kind of reaccumulated inside of here, but redistributed. Sorry, it distributed, right? Distributed, kind of it reaccumulated here because it never broke down and took this out. So this is in distribution. All right. So now that we see what happened inside of here, this FEG, not only that, let's go look at it on the time frame, right? On this specific time frame, you can see how on the hourly, let's see what happened. You can see how the bodies respected it here, never closed above. And if it closes above, sometimes it's barely, and it'll continue down. All right, never closed above. All right, so let's go into what happened with NFP. All right, I hope you got some nuggets off of this. Let's go ahead and take this out here. Go ahead and take that out. All this out the way real quick. Okay, now you can see how price came into this consolidation and it shot up during NFP. Now, where did it shoot up to? Okay, it went through this fair value gap in OTE. All right, came into this imbalance right here. This imbalance right here. And what else did it come into? It came into the breaker. The mitigation block of this move right here. Okay, and also the rejection block on the hourly time frame. So let's look at it on an hourly. Look at this. Hourly time frame, rejection block, order block, wick of the order block here. It came right into that wick right here, and it did a dive down. All right, now I wouldn't have had no sell limit right here, right? I would like to see what price did. Okay, so you can see how aggressively it broke down. But look at this. Look at this. This is why you should always leave your PD array, have all your PD arrays, so you build more context. When price came up into this rejection block, it broke down. And what did the bodies of the candle do? It never closed above this FEG still in this breaker. Never closed above this one, and definitely never closed above this one. Okay, so what? We got context now. We're bearish, right? We know that price is respecting inefficiencies, right? So what would be our draw on liquidity? It would still be that end of consolidation right here, right? Because if we're respecting this, we're not really going above this. That means the only draw that price is possibly drawn to is these lows still. All right. So once price did that, let me show you guys this. Price came in, broke down. This is the inefficiency right here. Created an up candle right here, broke down, okay, aggressively, and look where it came back to. and respected, came right back into this inefficiency with this bearish order block and broke down. Okay, so let's go on a smaller time frame and see how that looks right there. Okay, man, I'll give you guys some nuggets right here. Look at this. It's more than just order blocks, guys. When price did that, it came into this order block here, broke down. Look, inefficiency. Let's go ahead and mark this out. Mark out your inefficiencies. Look at this. Look how the bodies respected. I'm gonna go ahead and put this in red so you guys can see it a little better. Okay. Put this in red. Look at this. Bodies never closed above. Came into the order block. Never closed above the breaker. Okay. Broke down. What did it do? Look, on a smaller time frame, you know that this is a stop hunt breaker structure. Look, stop hunt this high. Make this black real quick. Let me do this. Make this black. Stop hunt. Breaker structure. Maybe on the seconds time frame, that's how it looks. Okay. Came up, came right into this order block. I mean threshold of the order block. Dipped down. Okay, broke down. All right. So if you didn't get this entry, this was your reaction. This was basically your confirmation right here. Okay, you had that. Now let's resume. Okay, we know where our draw is. Remember, guys, our draw is that end of consolidation. Even this low here that it left, in that end of consolidation over here. Okay, so we have that. Price broke down. Okay, let's mark out what's going on. We have a bearish order block here. Let me do this. Okay, order block. What else do we have? Let me go ahead and mark this out right here. Actually, I'm gonna take that out. I'm gonna take this out. You guys see this up candle right here? This is our bearish order block. So you guys know that there's an order block inside of here. I actually could do this right here and change the color to let's just do blue. All right, bearish order block. Now, where's our inefficiencies? Right here. Look, fair value gap. This is what you want to see. Look at this, from this body to top to the body of this candle here. Okay, look at that. What did price not do? Still didn't close above it. Okay, tapped into the order block. Never closed above this fair value gap. Broke down. Okay, now that we have that, right, we have this breakdown. We have this breakdown here. Okay, look at this. Your entry could have been here. If you didn't get up here, you could have got in here. If you scaled, if you have some positions in here, you could have scaled in here. Move stops a little bit to the low. If you have stops above this, you move it here. Okay, now look at this. Stop hunt. Right here. Guys, don't get bored on me. Really pay attention. Really pay attention, guys. Okay, stop hunt. Break of structure. Okay, what happened? What happened, guys? Okay, look what we have. Look, FEG right here. I'll make this red so you guys can see it. This is what you want to see with your order blocks. FEG here. All right. Now you can see how price came into this here. Okay. And then it closed above this FEG right here. But this is something you want to pay attention to as well. We know that we have an order block here, right? Which it didn't come into. But this is what you want to see here. This is what you want to see here. Okay. You see how price broke down right here. You see how the bodies, look, this is the discount of this imbalance right here. That price respected. This is the discount. This is the premium. Look where price came back to at the discount, and look what it did. The body still respected this discount array. Okay, it still respected this discount array. Now, say you didn't want to enter here. Say you're afraid. You don't want to enter here. You need confirmation that this is gonna hold. Watch this. Price made an up candle, broke down. Okay, creating a fresh order block here. This would be a fresh order block, potential order block, high probable order block. That price should hold. This should hold. Okay. Now, what happened? Price came up, came into the order block, respected it. Your entry could have been at the open, or it could have been right when price came right back into here. Right. Your entry could have been here. Stops above here if you want to be safe, or here, and if you want to be aggressive here. All right. Let's see what happens. Okay, price broke down here. The same thing that I'm showing you guys right here. Look at this. Look at this. Price came into here. Okay, say you didn't want to take no sell limit, you want to wait. Price broke, created this up candle. Price broke it, creating a fresh order block. Once price came back into it here, this is that could have been your entry right at the open or mean threshold. Stops above or above here, and your targets at that end of consolidation. Okay, now you see how price is rebalancing. You see how price is respecting these FEGs. You see how price is mitigating. Okay, this is order flow. It doesn't have to come all the way to the order block. Okay, it could just come into this inefficiency, even come into the consequent encroachment of it, and then continue down. All right, now look at this. Let's continue. Price did this, created this up candle, aggressively ran down. This is what you like to see. Broke structure. Okay, broke structure here. What did price do? Let's see. We have from bottom to low our 62% OTE is right here. Okay, keep that in mind. Keep that in mind. OTE is here. I'm gonna go ahead and put that up there for you guys. Okay, OTE. Okay, let's take that out. What else do we have? You see it? Do you guys see it? Look at this. Okay, this is what you want to mark out from the body. Let me zoom in a little bit so you guys can see it. From the wick here of this candle, bottom of the wick, to the tippity top of this wick right here. This is your SIBI. This is your imbalance. Okay, price came into, look at this. Price came up, came into it. Okay, you could have entered here. Don't have to enter at this order block. Okay, because it doesn't, when order flow is very, very strong and it's trying to get to, once again, is objective, it's gonna come into the mean threshold, or it's not gonna fill it at all. It could just wick into it, right? Wick into, rebalance it just a little bit, and it continue down, right? Price came into here. Look, completely rebalanced this right here. What happened? Say you didn't want to enter. Say you didn't want to enter. You could have waited until this up candle, after the rebalance came into this up candle. This up candle was formed. After it's broken, you can enter there, or wait for a stop. Wait for it to come back into it, right? Sometimes it doesn't do that. A lot of times it probably, sometimes, I'm not going to say it. I don't even know. Okay, it's half. Sometimes it just leave it, like it'll do like a breakout and just continue down. And then sometimes it'll break this down candle and come back into it and then continue down. All right. But this could have been another entry here. Okay. Could have been another entry there. And then you could see that price broke down and continued down. And then it started reaccumulating here. Let's look at this for a second. Okay. You have this inefficiency here. This order block. This this bearish order block here. Now this isn't a very probable area, but you guys get what I'm saying. You want to read what price is doing. Okay, came into it, never broke above it. It almost never even broke above this here. Look at the bodies with this inefficiency right here. Barely broke above it. Okay. And then continue down here. And then it finished out what it was trying to do. Its objective, right? It's subjective until let me see, hold on, give me 1 second. When it took out this consolidation here, right? That was your target. That was your target. Is in the consolidation. So look how many times price would have gave you an entry to get to the draw on liquidity. And that's what I'm saying. You have to know where your draw is. Where is the draw on liquidity? Higher time frame. Where's the draw? Current draw. What is price reaching for right now? This is what price was reaching for. Price first reached up here, and then you have the confluence and smart money is showing you what they're doing, where they're holding price, what price is respecting. You have all the confluence you need. Now all you got to do is just get in line with order flow to get to that draw on liquidity, right? And you can see this was a very clean move from here. Even here, when price came into here, it created a market maker sell model, right? And you can see how the FVGs were respected when you look back at the beginning of this video. All right, but this is how you get in tune with order flow. You want to practice marking out, getting a whole lot of confluence, using FVGs, use all the tools, but you can have one model. You can have one model and understand that model, and it will all is fractal, right? It'll be in these areas, okay? Whether it's stop point breaker structure, OTE, whether it's breaker, you using a breaker, whether you're just using FVGs imbalances. Once it comes into the imbalances, and you that's where you enter. You know what I mean? Whether you do that or not. But this is how you get high probable. This is how you get in tune with the market, what order flow is doing. And this is how you get high probable trades when you have this much confluence. This much confluence equals a lot of context. Okay? So I hope you guys got a lot of nuggets from just this little video. If you guys want me to do more, please give me feedback. Leave me, some feedback. Leave me a like button, share this video. You know what I mean? If you guys really enjoyed this, and I'll bring you guys more price action studies, even trades that I take, I'll break them down. All right. So with all that being said, I hope you guys enjoy your weekend, and I'll see you guys on the next one. Peace.